My name is Loftie Botha, and I look after tracker funds and smart beta funds at Momentum. Index funds in the current market has a few compelling advantages. The first is, it is accompanied with a low fee, and in a low return environment, this counts for a lot. The second is, these are low risk instruments. What do I mean with that? In investments, we speak of two types of risks: market risk and company specific risk. At the moment, market risk is at elevated levels. That said, a tracker fund takes no company specific risk. It follows the index exactly. There's no over or underweights. The third point is, tracker funds provide the ideal vehicle to take part in the recovery that always follow when markets have been oversold. We know that because there are many decades of history of indices. However, there are not many portfolio managers around with many decades of history showing how they recover after a market pull down. Smart beta funds use quantitative techniques aiming to outperform their benchmarks. It's also called style investing. So for example, our Momentum Trending Equity Unit Trust follows this approach. It buys shares where there's a clear trend. And why do these trends happen? Some investors see an opportunity first. It's not very certain at this time, but they start buying. And just like a herd in the animal kingdom, other investors follow. And then a trend manifests. And our fund identifies these trends and exploits it. And it's also been very successful in doing this. So since inception, back in April 2017, this fund had an annualized outperformance of 9% above its benchmark. Even in a down market, this fund performs relatively well. So the market lost around a quarter of its value in the first quarter of this year, and this fund outperformed its benchmark by 4% in this down market. It's still at a negative return, but in the long run, all these pieces of outperformance add up, and an investor is in a materially better position after a decade if he invested in a fund that could show outperformance in both up and down markets. What type of shares do we like in this fund? Well, three examples are SPAR, Nuclex, and Anglo Gold Ashanti. It is often said that a value strategy is the other side of the coin of a trending strategy. Our Momentum Value Equity Fund buys shares that trade below their intrinsic values. In this market, there are a lot of opportunities, and these shares that are trading so cheaply is highly likely to recover more than most, helping us to outperform the benchmark. It is often said that value funds underperform in stressful markets and then outperform in normal to up markets. However, the last 3 years have been a stress market, but this fund outperformed its benchmark by 2% on average per annum since inception back in April 2017. What shares do we like in this fund? Three of our bets are Vodacom, BHP, and British American Tobacco. While all of our products has its own merits, we believe clients will be better served by investing in a blend of our tracker and smart beta offerings. Constructing the optimal blend is an art, however, we at Momentum can help you with just that.